All right, so what's a buyer's market? What's a seller's market? Because we hear those terms talked about all the time. A buyer's market, think about like after 2008. So if you remember then, that was when there was the big financial meltdown, the housing bubble burst, that whole collapse that happened after 2008. A lot of houses were foreclosed on, and that meant a lot of extra inventory coming on the market for sale. You also had fewer buyers because the lending standards tightened up so much, not as many people could get qualified. So you had not a lot of people able to buy, but a whole lot of houses on the market. That means that if you want to sell your house, you have to be very competitive. You're not going to get top dollar for your house because you only have a handful of people available to buy it, and they have a whole lot of houses to choose from. You want to make yours as attractive as possible. So your price is going to come down. You're going to have more concessions. The buyer has a lot more leverage in situations like that. So that would be a buyer's market, and you can kind of tell it's a buyer's market by looking at a couple indicators. One would be like the average days on market, so how long a house is listed for before it gets sold. You're also going to look at like the ratio of the actual sale price to the list price. So if there's a big gap between what a house gets listed for and it actually sells for, that's another indicator that you may be in a buyer's market. Buyer has lots of leverage in that scenario. What about a seller's market? So in a seller's market, you're going to have a lot fewer inventory, but a lot of people wanting to buy. When that situation arises, you have a lot of people all trying to buy the same house, and when that happens, it's just natural competition. People are bidding higher, it's really escalating the prices, people will bid over the asking price. So in situations like those, the seller has all the leverage. They can pretty much demand whatever price they want. They don't have to have any contingencies. They can not offer any concessions or anything. The buyers are having to put their best foot forward to even have their offer considered, and that would be indicative of a seller's market. The flip side of that is that the days on market is very low because as soon as a house comes on market, you can have offers on it. The ratio of list price to sales price will be very high, probably at or near or even over 100%. The selling price is going to go over the listing price. So those are all indicators of being in a seller's market. So what kind of market are we in now? A lot of people might think it's a seller's market because inventory is still really, really low. A couple reasons for that. Number one, houses just aren't being built fast enough to satisfy all the people that need housing. That's been a trend for several years now. It just hasn't caught up, and we're still seeing a shortage of houses being built compared to the number of people and families that need housing. Something else contributing to the lack of inventory, there's people that own their homes now that in normal markets would consider selling that house and moving to a bigger, better house, something like that, but they're not doing it. They got such a great rate and such a great deal refinancing during the pandemic that they don't want to give that up and pay a higher price at an elevated interest rate, and they're just saying, we're not doing it. We can't afford it. So all those homes that would normally come on the market just aren't there. There's not inventory. You look at that and you say, well, of course, we must be in a seller's market. Yes, there are people that want to buy houses, but there's a lot of people saying, look at the price of houses now. I can't afford it. Look at the high interest rates today. I can't afford it. I'm having student loan payments that are going to resume in October. That's another payment that I wasn't expecting. So you look at it from that perspective and you say, well, maybe it's a buyer's market. So which is it? If you ask me, I think we're kind of right in the middle. And I don't mean there's a healthy balance between buyers and sellers that keeps us in the middle. It's kind of like both ends of this seesaw are so broken, they kind of just balance each other out, and that's how we end up in the middle. So if you're a seller, I would probably say your expectations wouldn't be to list your house and then have 25 offers by the next day, with the best one being a cash offer, $100,000 over your asking price, waiving all contingencies. Probably not going to happen in this market. On the flip side, if you're a buyer, this isn't a 2008, 2009, 2010 market where you can offer $100,000 less than list price, ask for everything paid for, ask for every contingency. It's not that kind of market either. For each side, it seems like we're just kind of meeting in the middle. That's not to say we took the healthiest path to get to the middle, but that's kind of where we are today. And that's probably the only normal thing of what's going on in real estate now.